Hello everyone, my name is Matthew Frailey. I'm the founder of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms, which have been absolutely kicking ass this year. Been doing this since 2003 for individual traders and professional institutions, which I consult with on a weekly basis. All right, it's been about 2 weeks since I posted a video on YouTube. Was on vacation, and I actually got COVID. The whole family got COVID, so not a fun thing. I'm still recovering over that. But anyway, let's get started here. So here's my back end for our newsletter recording system. And let me get that started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone has had a nice weekend so far. It's Sunday afternoon. This is the comprehensive newsletter for Sunday, August 15th, 2022. As you know, you haven't heard my voice in a while. I've been on vacation for since August 3rd. I got back on Thursday, and as many of you already know, I got COVID. The whole family got COVID, and the family we went with got COVID. Again, not a fun thing. I'm still recovering, and you know how that is, those of you who have had it, so I'm kind of dealing with that. Anyway, this newsletter here, as you can see, divided into 8 major sections. I didn't add any trade ideas here tonight. I'm trying to get back into the swing of things since I've been out for 10 days. So I'm going to keep it pretty simple, but we do have a lot of charts to cover. Again, if you happen to be new to Breakpoint Trades, these long-form weekend newsletters are quite comprehensive. Usually take about 50 minutes to an hour to cover. One thing I'm going to discuss is our reversion and mean systems. They have actually absolutely kicked butt this year and recently. In fact, one of our systems called the bear long, it's primarily a long condition that occurs in bear markets or when you're well below the 200-day moving average. It caught the bottom in June and in July, and it's still long. So I talk about that in the text here. This is not really something you could easily read on YouTube. Make sure to set your YouTube at 1080 resolution. That should be good enough. But otherwise, remember these newsletters go out via email format. You know, they open in your browser. And that's a better way to look at it, especially if you're looking at some of the text. But one thing I want to talk about here, which I discussed, is, you know, the bear long has caught captured 623 ES points since June, and 1,480 points if you can count all the systems that have triggered since that time. There's been 4 shorts all made money, and for the year, the systems have captured almost 2,500 points. Think about that, guys. 2,500 points. What ES trader wouldn't be astounded with catching that many ES points? That's 60% of the S&P value. All right. Again, the systems are mutually exclusive to one another. So, you know, that said, the systems carry value over our subjective analysis for the following reasons. The reason why our systems are so popular is because even if our market analysis is absolutely perfect, it requires you to, you know, listen to our full commentary, understand the charts, formulate a plan based on your risk tolerance, and then execute it, dealing with emotion, etc. The systems are super easy. We tell you that when to enter, we tell you when to exit. Whereas, you know, like I said, even if our roadmap is absolutely perfect, you know, people still will mess it up. So that's why I think the systems are valuable here. Again, as far as the market here, key observations, you know, once again, another solid week for the market. S&P up 3.25%, NASDAQ up 3%, Russell up 5%. Okay. Almost every sector closed positive for the week. It was a very broad-based rally once again. Cryptocurrencies also posted solid gains, and the commodities, CRB up 5%. Every single commodity we follow was up. Even gold was up, but it is lagging. But it was up as well. As far as the market, again, there's been talk about recently, especially, is this a new bull market? Did we put in the bear market low in June? Look, anything's possible. As you know, our analysis since December and early January, we called for a bear market. So we were very early on that, and it was a good call. Okay. For now, we have been counting this as a bear market rally. Now, could we be wrong? Possibly. But it really doesn't matter, guys. What you have to realize is both the bullish case and bearish case called for a major bottom in June. And that's what has happened. We've had a decent bounce in June, a big rally in July, and so far we're up in August. Okay? Both the bull and bear counts are aligning. So even if you're in the bear camp, you should have been primarily long and looking for long opportunities over the last 2 months. You should not have been short and missing this rally. Okay? Plus the systems, they've been long as well. Now we're up and nearing some of our target areas. 4230 was one of them, which we've exceeded. That was the 50% fib. I think a possible area could be the 4320, the 61.8 fib, maybe the 200-day moving average, and we'll see what it does up in there. Right now, it appears we're in some sort of wave 3 of the C or 1, which would be the bullish case. We still favor the C pattern, but we'll see which plays out. Like I said, it doesn't matter. They're both aligning at the moment. And another thing is seasonality. September tends to be one of the weakest months from a seasonality perspective. And maybe the market will hold up for a couple weeks into September, and that's where we finally get our correction. All right. Yield curve is strongly negative, as you know, continues to get worse, and we are in a recession despite the administration trying to redefine the rules of a recession. All right, so let's move on. We're going to talk about these systems here real quick. So this first image below, item number 2, I'm just showing the system trades that have occurred on the ES this year. Remember, we run the same systems on the SPY ETF. They don't do the same trades, even though they're highly correlated instruments. SPY and ES, they're 99% correlated, obviously, but they still do different trades because prices are different, etc. So here's the trades that have occurred this year. We've had 37 trade signals. These have all been emailed out to subscribers since early January. There's a few losers here and there, as you can see, but overall solid gains. Look at these winners, guys. So if you just took these small sizes, and this is of the MES contract, that's the micro future, so it's only 1/10 the value of ES, you'd be up 18,000. Okay, and we still have an open trade via the bear long, which you see there. It went long on July 13th at 38.04. Let's just call it 3,800. Right now we're at 42.80, so it's up 476 points on this one trade. Been awesome. And remember, as I stated in my comments, we also had a bear long back here in early June, June 13th, June 16th, and those made money. Okay, and we've had a few shorts here and there as well. We had the breakout, but awesome trades here again. So far for the year, just since June 13th, the ES systems have captured 1,400 points. If you count all the point gains here for the year, it's almost 2,500. Unbelievable. If you're not taking these trades, guys, why are you not taking these? You don't have to think. We send you the trade notification whenever these going to do a trade. You do them. We send you the trade notification when they're going to exit, and you do them. So you can simply follow them like a 100% mechanical system. Okay. You have to decide, of course, what position size that fits your risk profile, but we provide the signals. You don't have to interpret any charts or analysis, trend lines, stuff like that. Okay, that's what makes them valuable. So next. Oh, before I get into this next chart here, in case some of you aren't aware, you might say you don't trade ES or MES futures. You don't have to. You can trade the SPY-related ETFs against that. Okay. So, I hope you're not missing out on the ES system signals just because you don't trade futures. Trade SPY, SSO, SDS, whatever. All right, so this next image here, item number 3. So here's some of these systems that have done trades the last couple months. So here's the bear long on this upper left area. So you can see in June you had 2 entries. The second entry basically got the low. See that? Caught the low, sold here, made about 150 points. Got out, was out for about 2.5 weeks. Then it went back long here, 1 day off the low, and has caught this whole move. So collectively, it's caught this whole friggin' move. Now, besides the long, remember this one is still open. You had another long here, a breakout that made a couple hundred points. And you had 3 shorts, albeit they were very quick shorts. You had 3 shorts on the high, mid, low system here, while at the same time this system was long. So you made money on here. A lot of these, I think this one made 50 points, 40 points, 20 points. That adds up. And then you had a short here on this one. This was the QEBTS. Covered perfectly there. So systems have been kicking butt. Start taking the trades if you haven't done so. Or if you're watching this on YouTube, sign up for Breakpoint Trades and start receiving these trade signals. All right, let's move back to the newsletter. So item number 4 shows the index sector table, what transpired on Friday. Solid up day, as you can see, broad-based rally, everything up, all the sectors up. And for the week, like I said, solid gains, which I already discussed. Solid gains in all these sectors, except biotech, that was only one slightly down, but otherwise solid gains here across the board. Currencies, US dollar, pretty big pullback for the week, though it bounced back on Friday. It is near support, as I'll show when we get to that section below. Crypto's all in a nice week, to be expected. They're moving with the market. Commodities, they were a little bit mixed on Friday, but solid gains for the week. CRB up, the index up almost 5%. Coffee up 8.9%. I drank plenty of coffee on my trip. Copper, or natural gas up 8.75%. Copper up 3.3%. The ag's up too. Even precious metals like gold, which has been a stinker this year, was up, and the stocks were up as well. They've all rallied nicely from, when I discussed these a few weeks back before I left. And the bonds below, they followed the market like the high-yield corporate, and TLT was down. Next, item number 5 shows the economic news calendar. So you can see what's on the docket for this week. And remember, guys, just from a seasonality standpoint, September tends to be a very weak month of the year. So we're about halfway there. So we'll see what happens in December. But obviously, keep an eye on these economic readings that come out. Also, the FOMC minutes here on Wednesday. Next, let's go and jump to the charts. So first off, since I just discussed the systems too, reversion to mean systems, let's look at the trend systems here. So here's the S&P weekly KISS trend system. So this one actually went long in early July. It actually went long slightly before the daily. Now, it's actually a pretty good entry. For now, it still has the same DVT, which I would not leave a stop that low at this point. Okay, but one thing I want to point out here on the weekly is notice how price is approaching this weekly ATR. This is generally a great support and uptrends. We've been downtrending. This could be a potential big resistance area. It lines up right around these levels that we've been discussing. Okay, keep an eye on that. Also, an important thing, the 60-link stochastic, which you see here, price is approaching the 50% area. That tends to be another major dividing line. So we'll see how it responds in this 50% area. We'll find resistance in here, start to curl over. Under a bearish case, that's what I would expect. We'll see. Next, Chart number 7, here's the daily KISS S&P. So again, it's been mostly out of, in cash this year. It went in cash back in early January. It attempted a little long here in March, mainly for a wash trade. You can see it got 2 DVTs there. And then it went long here. I can't remember the exact date here. I think it's July 21st. But once it had a confirmed break over this ATR, it placed a DVT trailing stop initial down here, which was pretty wide. My feelings at the time when it went long was if you wanted to chase it, wait for a pullback. And you got a pullback over the next couple of days, which would have been a better buy opportunity, okay, to the 50-day moving average here, which is seeing red, okay. But notice the KISS system has done its job. It has continually ratcheted up the DVTs, so the new trailing stop is now 40.88, which is above the entries, the entry down here. So it is guaranteed to make money now no matter what happens. Again, the KISS systems are really good at keeping you invested a long period of time in bull markets. But as you know, we've been counting this as a bear market. But so far, it's caught a winning trade here since the DVT is now above its entry. So no matter what happens, guys, let's say we're in a bull market and we go back to the highs. Well, the system did a good job of getting you in. If the market decides to sell off in September and test the lows again, well, this will get out profitably. Next. Chart number 8, here's something I haven't showed for a while, and I may start taking snapshots of this for the website. I haven't been doing it. This is the KISS system for Apple, okay? It's actually done pretty well here. So it was in cash coming into the year. It took a long in March, made a little money here. You can see, went long here. Then it had 4 DVTs. So you would have stopped out at this 165.70 area over here in April, but it made a tiny bit. It took a long here, which was a loser, okay? Basically went long here and then it hit the stop. But this last entry here in July, early July, has been quite the entry. And now you have 3, 4, 5, 6 DVTs, so very, very profitable. Next. Chart number 9, here's a daily chart of Apple. Steve drew this up. This would be the bearish case, and boy, would that trip up some folks. Had a rally all the way here, and that could be some sort of wave B, then you come all the way down. Again, this either plays out, you get a little in here, or you just go to new highs again. Apple, as you know, has been beyond resilient, which is what Apple tends to do. So congrats if you've been riding Apple up. One hell of a move. Next. Chart number 10, here's the various cycle time frames for the S&P. So really not much to say here. We're a little overbought short term. Go to the mark 9 on the 130-minute chart. But, the ATR indicator on all these time frames is now support on the 130-minute, on the 60-minute, etc. That's your support. And you can see what happened while I was gone. These are your resistance cycles. Remember, your support cycles are the cyan. The resistance cycles are the magenta. When price breaks over these resistance cycles, like you see here, that is a breakout. That's bullish. You can buy that, okay? So that's what occurred. Next, moving back to the traditional charts, and let's start from a top-down fashion. We'll start with the bigger picture monthly chart. So here's the snapshot of the major indexes, monthly chart. Again, another solid monthly candle so far. Remember, we're mid-month, okay? As you can see, the Dow and S&P rallied basically off their lower monthly Bollinger Bands, which we discussed 2 months ago. The NASDAQ, same thing. It had retraced 38% of that whole previous bull market. So technically that is enough for a bear market, okay? But given the backdrop, we still think the market, it would be a miracle for this to go to new highs right now, but anything can happen, obviously. Next. Chart number 12, here's a weekly view. Shows you the nice rally progression we've had over the last 2 months. Here's some downtrend lines on the Dow, The S&P, you can see we're approaching them. We still got a little ways, still got a little more room to go before we tag those. We also had symmetry breaks, weeks ago on that move, and that was bullish. That's what these lines here measure as symmetry. So those symmetry breaks weeks ago all argued for higher prices. Next. Chart number 13, here's the daily chart of the 5 key major indexes, the Dow. Again, you can see your downtrend line approaching here for the January highs. Here's the S&P. Again, you have some room here, and you could also Pinocchio move over those too. So just been steady Eddie. And what's been really kind of outperforming lately has been the small caps. Next, let's zoom down to the individual indexes. So here's the monthly view of the S&P 500. Again, going back to 2007. So we had that bear market at that time, and then we had the super strong secular bull market from the 2009 lows in this channel. Okay, so the bearish view, guys, as we've been discussing, is that we had a wave 5 that was put in place in late December, which we have favored all year. Okay, so because there's a lot of bull talk out now, a lot of, the bear bus is emptying, and a lot of people are getting on the bull wagon. This would be the bull case in green, where the correction we had this year was a large wave 4, and we're going to go to new highs in wave 5. So which is it? We've been favoring this one, but this one has been valid, and it's always been valid. Okay, so if you're in the bull camp, you're looking for this for a new high eventually. If you're in the bear camp, you think we're going to form a lower high here. Again, like I said, over the last couple months, it really doesn't matter, because short term, both bull and bear counts argued for a decent rally, which we've gotten. Okay, let's see what else we got here. Next, chart number 15, here's another monthly view of the S&P, and I've been showing this. So one thing that's been arguing support of a bear market is this 14 stochastic, when it really falls below the 50% area that occurred back in 2000, back in early 2008, and of course this year. All right, it's obviously curled up a little bit here with the rally, but hasn't moved that much. Again, under a bearish view, we'd form a lower high and come down again. So again, this will likely not be answered until September. Next, chart number 17, here's Carvana. The reason I'm showing this is because, before I left for vacation, I thought the market would not top out in early August. There were too many stocks, crap stocks like Carvana, that were in these super nice basing patterns. And this was on the website as a trade idea on the long side. And you can see this was a really beautiful pattern long. And look at the percentage move if you bought this sucker, in the 20s, rallied up to the upper 50s. So there was too many stocks that had this look back in July, late July, that I thought the market would have a pretty good rally up still, and that's what's happened. Next. Chart number 17, here's a weekly view of the S&P. Again, remember, we're moving in a top-down fashion. We're moving to lower time frames. So solid candle up here. There's the weekly chart. Here's this moving average here. That's the 50-week MA. 61% fib. Right up in this level, as you can see. 4,300. A little over 4,300. Next. Moving down. In time frames, here's a daily chart. Okay, got quite a bit of context on here. Again, if you're getting the standard newsletter format from our website, I suggest you read it. But I lay out both a bull case here in in green, and a bear case in red. Okay, you could pause the audio and read it as well if you want to. But basically, again, under the bullish case, the market would have simply put it in an ABC correction bottom at the June low. And we'd now be rallying up in green here in a 5-wave pattern. Currently, we'd be in wave 3 of 5. You get some sort of pullback soon. Then another move up in a 5 to complete wave 1. Then you get a decent correction, maybe a 38% or larger correction, retracement of this move. and then you form a wave 2, high or low, and that's your big swing opportunity to go long, and then you rally to new highs. The bearish view is, as we've always said, we're in this ABC, we're working on this C, which, you know, this move appears to be some sort of wave 3 of C, which, you know, looks like it may need a fourth wave and then another move up too. There's a, right here, there's a gap, 4271 to 4300, which would be my initial target. So possibly I'd like to see us get a little follow through up, maybe Monday. That might be an area to start looking for some hedges or some aggressive shorts, okay, up around this area. But you can see, guys, both the bull count in green and the bear count in red all counted, all lined up. They all counted for this moves up to this areas, which we've gotten. So up in this area now will be the telling thing. And like I said, September tends to be weaker seasonality, so maybe that'll be when we start getting our bigger pullbacks, one of these two. We still favor the red, but we'll react, we'll monitor, we'll project, monitor, and adjust to whatever happens. We'll make money regardless. Next. Chart 19, here's a simple, clean daily chart, no indicators. Got a little channel here. This shows you this kind of large wave 4 of an ended diagonal, wave B up here. This, you can see, would allow for still quite a bit more rally attempt up to the 4320, 43, almost 4350 area even. And then another sell-off in a 5. That, if this were to play out, I think that would really cause the most pain, because up in this area, we get up into here, I think people are gonna get super, super bearish. There's gonna be no bears left, and you know, everyone will be on the bull bus, and it'll be time to empty it. And moving down to here, I think would cause a lot of pain. We'll see what happens. Next, chart 20. Here's a Renko chart of the S&P. Each Renko bar represents 20 points. I've shown this before. A very clean chart. This has done well. It gave a long back here in mid-June, which was a good buy. Then you had a little consolidation, and it gave a buy here in early July, and it never gave a sell signal. Here's your downtrend line. Next. Chart 21. Here's a 195-minute chart of the S&P. So again, you can see we had this consolidation pattern back here. Remember, we favored an upside move, which we got. And we've retraced just between the 50% fib and the 61.8% fib from the highs. So we're a little over the 50% fib. That's why I wouldn't be surprised to get up here higher. This trend line, maybe even the 61 fib. Next. Chart 22, here's another, here's a 2-hour time frame. It basically shows you the same chart we've been showing for weeks now. We've been counting for a move up in this X wave, these higher prices, wave C, whatever, for weeks and weeks. So way back in July, we were counting for this. And so far, this has played out. These were our target areas. And, you know, we're starting to near them, as you can see. Congrats, you've been staying on the long side. Monitor these areas now, though, as resistance. Next. Chart 23, here's another 2-hour chart. I found this from Steve, but he showed this consolidation range that we were in here for a couple weeks. But when we busted out of that last week, price rallied nicely higher. A simple target would be taking the range, adding it, and you can see we're nearing that initial target of that range. Next. Chart 24, here's a 2-hour time frame. Now let's keep it simple, guys, so you can see the range, right, which we're basically achieving. But we've been in this tight channel since mid-July. The bulls have the football until you break this channel. So if you want to keep it simple, you know, this uptrend will remain intact until we break this uptrend channel. Next. Chart 25, here's a 60-minute chart. Shows you the same channel and also shows this pitchfork, which has been kind of interesting. We've been following along. Next. Chart 26, here's another 60-minute chart showing you this channel. Remember, the channel has been key here. Price has been staying within the channel. And over a week ago, when we had that pullback to this channel line, that was your buy opportunity. Retested that channel. Next. Chart 27, here's the 30-minute chart, just showing the channel. Again, guys, the channel is your key right now. We're working on this 5. We do have a little MACD divergence here now on the MACD on this time frame. So I'm watching, if we get a little pop on Monday, I may look to short that initially. And there you go on the S&P. Now let's move on. Look at the other indexes. Chart 28, here's the Dow. Usually don't show the Dow that often, but it's only 30 stocks. So the Dow, first off, the Dow had pulled all the way back to this 2020 area where it found support. See that? Support, previous resistance became support. Anyway, we had a symmetry break back here. That was bullish. We're now nearing this downtrend line from the highs. Next. Chart 28 or 29, here's the daily view of the Dow. Again, you can see the downtrend line from the highs and 200-day moving average, kind of a target area up here. Nice move from this wedge-like pattern. Next. Chart 30, triple Q's weekly chart. Again, really nice move off those lows so far. Moving average ribbons now pinching on the underside. Next. Chart 31, here's the daily Q's. We broke over the downtrend line on this one. Again, my target area would likely be here, 50% fib and 200-day moving average. Under a bear case. Under the bull case, we'll eventually work to new highs, but not straight there. Next. Chart 32, here's the daily kiss. So very similar to the S&P. It went long back here on that July 21st, and it's been able to raise its stop 5 times so far. Next. Chart 33, here's small caps Russell. They did the best last week, up 5%. Perfect example of technical analysis. This support was retested and held. We pointed that out back in June. That was a good area to go long. I should have went long a lot more of this ETF and just held it. So anyway, nice move, as you can see. Next. Chart 24, here's the daily view with the fibs. So you can see right at its 200-day moving average now, slightly over it. Keep an eye on this area, of course, and the fibs above. The Russell's been strong here over its 200-day moving average. All right, guys, that does it for the major indexes. So let's move on, look at a few indicators. Chart 35. So here's a chart that I talked about back in June, arguing for a major trade low. Was this chart. You had this, the percentage of stocks above the 200-day moving average was buried, which corresponded with all these previous market bottoms. And this indicator as well. So you had a lot of evidence for a major trade low back in June. Next. Chart 36, here's the VIX indicator pattern we've been showing. We lost this little coil trend line. This is kind of a support area to monitor now. Next. Chart 37, here's the daily candlestick of the VIX. We're riding this lower Bollinger Bands. So it is an area to watch possibly for the VIX to bounce. This could be the area to do it. It's been working down nicely as the market has rallied, as you know. Next. Chart 38, here's a 60-minute chart of the VIX. There is a wedge-like pattern forming here, so keep an eye on that. If it were to rally off that, the market would pull back. Next. Chart 39, here's the NIMO. Looks like this chart got kind of out of order for me, but we'll discuss it anyway. So what this shows is whenever the NIMO spikes out of its upper Bollinger Bands after coming off of a low, you tend to get a rally that lasts for a bit. You can see these times in the past. Above the Bollinger Band, get a 2-week rally. Above the Bollinger Band, just come off the lows. rally. And this time, of course, the rally's been a little bit longer, as you can see, but it's played out. Next. Now this is the chart I wanted to show you above. This is the VVIX. That's the derivative of the VIX. But take a look at this correlation indicator at the top. Look how low this is. I've never seen it spike this low. You tend to get these major spikes either near major bottoms or major tops. So basically this occurs when you're near inflection points. All right. So this is arguing, this is given a warning on the market that we could be near some sort of inflection point. Next. Chart 41, here's the S&P versus the 10-day inverse put call. This has been a good guide when you see these divergences. We still have with the market rallying here, this is lagging. We have a negative divergence here. Now this could be blown out and negated, but for now, this is a warning, this divergence. Just like here at the June low, you had a positive divergence where this indicator made a higher low. Right now, it's given a warning. Next. Chart 42, here's the bullish percent entered S&P, Rinco. This is also a chart that I showed back in June. Very clean chart. It gave you a perfect buy in this trend line retest there. Perfect ABC. And look, it's been absolutely perfect. All right, let's move on. Look at bonds and interest rates. Chart 43, here's the 10-year Treasury yield. For the week, it was up 0.3%. As you know, it topped out back here in June. This black candle doji, pretty good sell-off. You know, while the interest rates were falling, the short-term rates overnight were going up, and that's why we have a big inverted yield curve. Next. Chart 44, here's the 10-year on the daily chart. If we do get another move down, this could be a target area down here. Next. Chart 45, here's the high-yield corporate bonds, HYG. They were quite strong off the lows, and they argued for higher prices for the market, which obviously played out. Next. Chart 46, here's the daily view. You know, they broke over their downtrend line back in July before the market did, and I pointed that out, and that's been bullish. Next. Chart 47, here's the yield curve. So this briefly went negative earlier in the year, but look how negative it is now. It is buried. It is actually below the 2007 and 2000 areas. So it is quite negative here, glaring, and be aware of that. It does tell you that we are in a recession. And we have a recession. We have two quarters in a row, back to back, with negative growth. All right, let's move on. We're going to look at some individual sectors. So, chart 48, here's XOU utilities. They've been screaming. This has been because of that yield curve. So, again, you had a perfect bull flag back here we talked about in July. You could have bought that, and it's just been up, and away since. Next. Chart 49, technology. You know, they broke out of this pattern here in July, back tested, up, broken trend line here. Now they're back to its 200-day moving average. Next. Chart 50, semiconductors. Similar pattern. They've been pretty strong here, but a little lagging lately. Next. Chart 51, biotech. This was a pattern we pointed out as a double bottom opportunity back in June. And you had other opportunities to buy on these consolidations along the way. It's done well. Next. Chart 52, financials. They had a perfect double bottom there in July. Really nice rally off the lows so far. 200-day moving average is up here. Next. Chart 53, banks. Nice move so far off the lows. Not as much as the indexes above, though, we just discussed. Next. Chart 54, transports. Nice move off the lows, roughly to the 61.8% fib and 200-day moving average. Next. Chart 55, industrials. Boy, they have screamed higher from this wedge pattern. Well over the 200-day moving average and even the 61 fib. Next. Jabber 56, retail. The retail sector, XRT. Before I left, I pointed out that this had a kind of a nice rounded bottom look to it, and that's played out as well. This one still may have more meat on it. It's not overbought. Next. Jabber 57. Real estate. So even the real estate market has bounced pretty decently. You can see this back to the 61 fib, 200-day moving average. Next. Jabber 58. Home builders. They've also had a rally up as well. Finally, Jabber 59, energy. Your buy opportunity was back here in these 200-day moving average tests. So far, it's kind of been a choppy uptrend. You got a little resistance here to monitor now. We'll see if we can bust above that. Obviously, the energy area was the place to be from January up into this June time frame when you had that black candle. But the area to buy it back was back here. All right, let's move on to look at commodities. Remember, commodities all at a good up week. So here's DBC, the sector, up almost 5% for the month, for the week, I mean. Stalling so far, it's still kind of more been in a range here. Next. Jabber 61, there's the daily. You had two retests, the 200-day moving average. Next. Jabber 62, crude oil. This bear flag basically played out, but crude oil, remember this area, resistance is now support. That's where you want to look for support. Next. Jabber 63, crude oil, daily. Kind of a wedge pattern possibility here. Needs to break over it, though, and get it back above the 200-day moving average. Next. Jabber 64, natural gas, up 8.75% for the week. It's been super strong for the week, for the year, and it has not been fun if you're in Europe. Next. Jabber 65, natural gas on the daily. These last pullback found support at the 50-day moving average. I had a little trend line here to monitor as well. Got a moving average pinch last week that resulted in a bounce. Next. Jabber 66, copper, weekly view. So before I left, I pointed out copper. Look for a rally off that 61.8% fib from the 2020 lows to the recent highs. And so far, we've got a nice bounce here. Now, to me, this does look like a bear flag reflexive bounce. It doesn't look like it's just going to go, this is a logical bounce area, but it doesn't look like it can do that. To me, this will likely pull back again. Next. Jabber 67, here's the daily chart of copper. Remember, back in June, I talked about this doji candlestick. You had the RSI divergence at the time to support a bottom and the super wide moving average ribbon. And so far, it's been a nice bounce opportunity. It's now testing its 50-day moving average. Next. Jabber 68, DBA agriculture, up 3.5% for the week, so big move. Rallied off the 38% fib the last few weeks. Next. Jabber 69, DBA agriculture daily. Okay. Next. Moving on to cryptocurrencies, chart number 70, Bitcoin. So I noticed this chart from Steve, this weekly. This looks more ominous to me. This does support more of a bear market. So you had this big support here, which was lost. We're having this rally here, which looks kind of like a bear flag on the bigger weekly time frame, doesn't it? This area is big resistance. So, if it were to get up a little higher, stall here, and then decline, that would likely also drag the market down with it, the general market. Next. Jabber 71, there's the daily chart. Again, we've been in this kind of slightly sloping trend line channel. Next. Jabber 72, Ethereum. Weekly chart. Nice week for Ethereum, up 14%. Next. Jabber 73, Ethereum on the daily. Next. Jabber 74, Riot. This was a really nice pattern coming off the lows here. I talked about the volume picking up here. Talked about this as a long opportunity back here. in early July, and that's been one hell of a percentage move. It's doubled since then. Next, chart 75 US dollar. Here's the weekly chart. You know, that negative divergence I talked about weeks ago has been playing out. The dollar's been pulling back since then. Next, chart 76. There's the daily view of the dollar. So kind of this, we're in this downtrend channel for now. The dollar would need to get above this downtrend line on a closing basis to start rallying up again. Next, chart 77. Here's the ETF, UUP, similar pattern. Next, chart 78. Here's a 2-hour time frame. Another pattern to monitor this channel. Next, chart 79. Here is the KISS version of UUP, the dollar. So the KISS system actually went back long in August. None of these DVTs were hit. This vertical line just shows another entry point, but technically this entry back here was never hit. And to me, the dollar looked like a lower risk long last week on the retest of this ATR near the previous DVT. So we'll see if it can rally off this area. Next, chart 80, here's FXE, that's the euro. Keep an eye on this. You got a downtrend line here, which matches the 50-day moving average. That's your resistance. That'll be important. If it can break above there, or do we just go down again? Next, chart 81, gold, weekly view, up 1.4%. Again, it's been kind of a muted move, but gold so far, you know, did bounce off this major support here. This was resistance up here. So it's bounced off this resistance. So far, so good. Next, chart 82. Here's the daily view of gold. You know, the stocks have been leading a little bit here, which is a positive. Next, chart 83. Here's silver. That's also had a nice rally off the lows. Next, chart 84. GDX. So, again, I talked about GDX having a rally back in July, and it's had a kind of a steady, kind of a slow move up, but it has rallied. We'll see if it can get up to this resistance area. You know, we broke above this ratio trend line, which I said would be a trigger, and the BPGDM closed over its 8 EMA back here in late July as well. So all those were valid long triggers. Next, chart 85, GDXJ. This one is at a better percentage move out of this channel. That buying here was your buy opportunity back in July. Now it's struggling a little bit. It's 50-day moving average, but you have a nice trade so far. Next, chart 86, SILJ. This was the Silver Stock Junior ETF. That was another one we liked. Really been a nice percentage move as well. Next, chart 87, duplicated GDXJ. Let's move on. Chart 88. Oh, here's a chart that was in here. Like I said, I didn't add any trade ideas. This is NVIDIA. This was a long opportunity trade of ours back in early July. You know, we joked about following the Pelosi's because of that semiconductor bill. Obviously played out. And, you know, this is now your next area to monitor. Anyway, guys, we'll see what happens this week. Have a wonderful rest of your Sunday, and have a good week. Take care.